January 2016 looks like it's turning into the worst start of the year for stocks ever, for as long as we've got records. What does this mean for the rest of 2016? Good morning, my name's Paul Carroll. I'm the CEO and founder of Efficient Wealth Management, a boutique wealth management firm based here in the Woodlands, Texas. We already know that January 2016 was a terrible start to the year. What does this portend in the future? First, we're going to look at the history of the bull market from 2008. In August 2015, we had our first correction in 4 years, and the market was down 11%. Some of the emerging markets and foreign markets were hit even harder with the strengthening of the dollar. The previous correction was in August 2011. We had a 14% correction. What has been atypical in the last 4 or 5 years has been the reduced downside volatility in the U.S. stock market. The 5 years ending December 31st, 2015, saw the end of a Standard & Poor's bull run, including reinvested dividends, of 81%. For those who were eager to get out of quote-unquote a scary market 5 years ago, thank God we kept them in. This is the point of an asset allocation. We get to keep the winners even if we're not sure they're going to win. This has been a breather from an extraordinary bull run since the crash of 2008. But what about the rest of 2016? Well, there's 3 leading indicators that lead us to believe that this is not a systemic crash. Not really, it's just a recessionary breather. Maybe not even a recession. First, the yield curve is not inverted, which is a very reliable leading indicator of recession. Second, the leading economic indicators, though they do show signs of fatigue, they're not negative, they're not falling. And third, the forward-looking price-earnings ratio of the market is just 17. That suggests what we're seeing today after this correction is a fairly valued market. The fundamentals strongly suggest that the markets are just taking a breather. The global markets are not being hurt as bad as people think. It's being exaggerated domestically by the strength of the dollar. But as with all things, this too will pass. And that is also why a broad, diversified asset allocation will give us the advantage of their recovery sometime in the future. We wish you the best of investing success. Thank you.